In this video, I'll be showing you my favorite strategy for trading BTC. It is simple to follow and you can find this setup almost every single day. So I'll be breaking down my system step by step, and towards the end, we will also address the limitations of my trading strategy and what I am currently doing right now to improve my trading system. Okay, let's dive right in. Actually, it's quite overextended now towards the downside here. This move towards the upside is not that clean, but since 8:08 UTC, now it's at 8:29 UTC, it's overextended, barely any pullbacks. So around halfway into the hour, so around after 8:30, okay, when the new 30-minute candle opens. So I'll be waiting for a new low and immediately in the next candle for it to break its high like this. So we have our checklist. It is a range bound condition over the past 16 hours. And we're just waiting for that overextension. So there, that's already my first sign. So that's checklist number 2. Now we wait for a pullback of that because that candle made a new low, then break its high here. So we wait for a pullback of 50% towards here. There we go. You can either do limit order long or go on there. It's actually decent absorption while placing your stop loss below or just at the low. So you can go for a 1-hour trade, or you can target 50% of the hourly overextension. I'll be targeting here and we'll wait. And it's very simple to follow. So of course, when I first started off trading like this, seeing immediate drawdown just as I enter can be a bit spooky, but once you get the hang of it, you'll be used to it. You won't feel nervous anymore, if that makes any sense. Sweating a bit, but it's all good. So just for a clearer look, we can just get rid of this overlay because we know where we're at right now. And the maximum holding time for my position will just be before the next hour opens. So we're currently in the 8 o'clock UTC move. And if the trade doesn't hit my TP before the next hour, which is 9 UTC, I just close it. So now it's reversing back towards our favor. That's nice. Keep it rolling. Also, another tip, if you don't have order flow, you can actually use volume candles. So if you're on TradingView Premium plan, you actually have access to this feature where they just put, so instead of looking at volume at the bottom part, so instead of looking at this, they plot this in the candlesticks as well. So the wider these candlesticks are, it means the bigger the volume is. So you can see the past, 30 minutes or so had pretty big sell volume here and during these periods. When we entered here, it didn't have a pretty big buy volume, so that's not really nice, but it's not a must. But this following candle right here, it's pretty wide in volume, so there's actually a lot of buy volume in that area right there. So a bit more confident now for this trade to go towards my favor. We'll revert back towards the OG candles. Okay, that's looking good. It's coming back towards my entry. Not that nice, but it's not a big sell volume, so not nervous at all. Okay, maybe now I'm a bit nervous. But that's the thing. If you are, nervous, you should be nervous, but you should be nervous for the right reason. If you are nervous because you are not sure what your setup looks like, then that's something you need to work on. So let's say, for example, price takes out my stop loss. Then this is something I cannot control because of market conditions. It just means market condition change against my favor, right? You cannot control, and you won't know how many people are pressing the buy and sell button at the same time. I mean, if you have access to that kind of information, then you'd never be wrong. Checking the volume, still pretty decent on the volume. It's kind of light. These ones are heavy, and this is a heavy buy, so we still have this in our favor. And the key here is you don't need to ooh, damn, nice. As I was saying, and the key here is you shouldn't be analyzing when you're already in a trade. Well, unless unless looking pretty good now. That's already a 1R trade, I think. Yeah, 1R. But let's just keep it here at just about 50% of this move, this hourly move. Right here, right? So if it does come towards 1R, it's really up to your personal preference of what you want to do with your trade. You can either just close it here, you're already in profit anyways, or you can move your stop loss to break even, or you can just hold it. Now for me, I'm just gonna hold it anyway because I don't care about the profits or the losses of this trade. I'm risking very little. What matters to me more, especially during this time, is to get data from this if it works more often than not. And from there on, I can feed those data to AI and let AI analyze to see other factors. Maybe it's not just volume. What if it's footprint? What if it's some large market orders happening at that time? Are those factors consistently showing up in all of these winning trades, right? And if they don't show up in the losing trades, then we'll know that not to take the losing trades if we don't see those confluences showing up. So this is a really easy way to break down your AI trading step by step is use price action first. So this is how I'm going about it. I'm using price action first because AI can easily understand open, high, low, close data, right? It's basically the price during the time. But once you get to something more complicated, right, then you need another layer. So you have to, secure your layer first, then work on adding more layers on top of your existing layers. So trade is now going against my favor, a bit annoying. So perhaps maybe I'll be thinking like, okay, maybe instead of a 50% fill, then we'll just stick to 1R. That's like the lowest hanging fruit that I can go for. But we'll keep it to just at that level right there. And you can play around. It doesn't have to be just at the edge. You can even have it there, exactly at 50. Or you can even have it at 55. That'll give you nearly a 2R. But I have it here because, the lower your risk to reward is, the more probable your trades are going to go in your favor. So we'll just still keep this thing going. Okay, now that's a pretty substantial move towards the downside there, but the volume is showing us nothing, like average volume for those two candles. But this one was a pretty big sell candle there at the top. Should I be worried about this? Not so much. We still have this big, wide green candle as our support. So we know that the range would still be between here or here. So I'll hold it anyways. I know it's quite discretionary at this phase where your intuition or your experience uh, helps you decide. And I just have to say, like, if you're familiar with your setup, you have these intuition that is pretty difficult to describe in words. Only you can get a feel for it. But everyone starts somewhere, which is having a clear checklist for what your trade setup is, right? Then you follow those checklists. And then if you see those all checklists, all lit up green, you take the trade, right? And you don't have to be afraid if it's going to be a loss or if it's going to be a win, right? Because even if it's going to be a win and you're risking little, right, you still have a long way to go to become a millionaire. That's why to be successful in trading, you need to incorporate consistent risk management. The goal to succeed in this industry is to be consistent. And you cannot be consistent if you blow your capital in one trade. Even the pros still fall victim to lack of risk management because they would be so confident in their system that they would just risk a big amount. They might even full port into their trade with no stop loss because they're so confident that it's going to turn out into a win. But what ends up happening is they get liquidated, right? Because market conditions change. No one knows when it will change. That's just the law of nature for market. That's just the nature of the market. So that's my one tip here is if you get good at trading, okay, when you get good at trading, don't be arrogant, don't be arrogant and just ignore risk management and trade the same setup. The key here is to really protect your capital. Okay. Maybe you might go through like, one time where you got liquidated because you didn't know about risk management. Okay, right? That's pretty much everyone's story in trading. But then the second time you get liquidated, maybe you already know how to trade. You have a nice system, you have a nice setup, but you got liquidated because you got overconfident, right? So that'd be the second time. And the third time can be also the same thing. It's just a repeat of the second time, then the fourth time, then the fifth time. It's the same mistake. If you keep doing the same mistake, you'll end up back at square one. So this trade is taking pretty long, but we still got 11 minutes to go for the next hour. Okay. And my style is just, close it before the next hourly candle opens. Because what I'm trying to do here is not guess the direction. I'm trying to trade the reaction. And whenever one side is overextended with barely any pullback, right, there will be a pullback soon. And that's the reaction that we're trying to trade, is the snap back towards 50%. Because you've all been taught that the market push and pulls, push and pulls, push and pull. And for the bullish case, push, pull, push, pull, push, pull. Because if it overextends, there has to be a snapback. There's a lot of imbalance that needs to be filled somewhere in the middle. And the best average is almost always 50% of its previous move. And that's what makes this system, this strategy, so reliable and so flexible. Because we're looking at the 1 minute, we're only trading the reaction for the 1 hour. And this strategy is applicable to multiple time frames. It's just up to you to decide which pair of time frames you want to time the push and pull, right? So for me, based on my experience, it's the correlation between the 1 minute and the 1 hour. So now it's bouncing back again in our favor with 9 minutes left to go. Let's see if we get the TP or not. Checking the volumes, average for the past 10 minutes, average. So we have this as our support, this as our resistance, this fat candle, this fat sell candle, this fat buy candle. Remember, this is not necessary for you. You don't need to incorporate this in your analysis if you just started off. Just get a feel for, identifying your setup, then taking it. And once you get good at it, once you, get the hang of it, you will have this intuition. You'll start developing these intuitions for how your system works. And then you can be very flexible in your decision-making process. But 80 to 90% of your decision-making should be done before you even take the trade, which is achieved in your checklist, right? The rest of your decision-making, so 10 or 20% of your decision-making, should just be with trade management, right? Should you close? Should you TP if it hits at 1R? Right? Do you want to have multiple TPs or moving your stop loss to break even? Those are more so discretion based or intuition based. It's kind of hard to teach that one. So as of right now, what I can tell, okay, this is still a significant resistance, that sell volume area. But this current candle, it's attacking it, but it's still not telling me anything. Right, so just I'm verbalizing what my thought process is, intuition-wise. Also, that wick right there, immediate wick without seeing a body there, shows there is sellers. But now it's actually there. It's right at that candle, so it's not bad. Still at 1R. Yeah. So it's good. Okay, decent. Good absorption. Check the volume candle. Still average, so it's not telling us much there, but it can hit TP, so it's good. There we go. That's nice. So there we go. Hit TP. Nice. Big. All right, so 1.44 risk to reward for this type of play. So you can see just how easy it is to trade this setup. But I would say the limitation here is the win rate of this. I used to trade this last year in 2025, and I had a very high win rate, 73% during the month of July and 67% during the month of August when I was trading the Bybit WSOT competition. But after October 10th, you know, the Binance liquidation cascade, a lot of market makers got wrecked. They can't provide as much liquidity as they did before. So now the order books are pretty thin. Okay, so that's a big problem, because if there's not enough market makers providing liquidity to the order book, it can just take one whale to really change the market condition in the 1 minute time frame, because that's what I'm trading. I'm trading the 1 minute time frame based off of the 1 hour reaction, right? So it just takes one big guy to say, let's say here our trade doing pretty well, right? Remember that volume candle? So let's say this guy here sold even more BTC and it just instantly created that big candle there, and I get stopped out. That's something I cannot control. So that is the limitation of using this entry model for the time being. It's still my favorite entry model because it's so simple to follow. I just have a 3-step checklist and then take it if I see it. But the next step is the win rate, right? Trying to figure out what the win rate is. And this is the part that I'm trying to solve with AI. I'm trying to build an AI agent that can sift through other data, such as order flow, such as volume or CVDs, or even volume profile, where the low volume nodes are, where the high volume nodes are. Are there any relationship between that movement and the candlesticks themselves? So you can definitely do that manually, but guess what? It's going to take you weeks and months to even parse through 1 or 2 weeks of data. If you've done back testing, you'd understand the pain of getting your setup there and then letting the trade run and then analyze, what can be done for it to be a winning trade. So this is the part where AI will really help smoothen out that process. So we're going to be doing more coverage on using AI to improve our trading by sifting through historical data to see if there is in fact a recurring confluence that always shows up in winning trades. And if they lack in the losing trades, then we understand more. We'll add one more stuff to our checklist for a better win rate, right? This is something I'm super passionate about, and I am aiming to become one of the, and I'm aiming to get back my high win rate. So another question you might be asking me is, Ron, how do you find these 1 hour moves where they overextend aggressively towards one direction? They can happen in any time, but the most consistent ones that I find is the first hour of Asia session, which is 0 UTC, or the first hour of London session, which is 8 UTC. I think it will be 7 UTC, I think after March or something like that because of daylight savings. But it doesn't have to be the first hour of Asia or the first hour of London. It can be any time, okay? But if you want to track better data, you should pick a consistent time. And for me personally, it's 0 UTC and 8 UTC for these hourly extensions. And at those times, if you don't see an hourly overextension, right, don't take the trade. Sometimes it can be scuffed too, so that's also another limitation. So it might not be as clean as, 1 hour open, then immediately go. But one way to help you identify is along the paths. If you, let's say for example, this move right here, you do see that pullback, then don't take that, right? As long as it's at least 20 minutes of overextension, it doesn't matter when, right? So this is 30 minutes, right? This is 30 minutes. As long as it's 20 minutes long of overextension. So that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. Okay, so checklist there. More than 20 minutes of overextension. Then the entry point should be after 30 minutes. So you don't take the trade here. You take the trade here after 30 minutes and wait for that shift in market structure. And it can be represented like this. Yeah? Right? So in the 1 minute candle, it will just be a new low, which is this candle. Then the next candle to break its high, right? So that would be this candle. This candle breaks this high. Okay? So when you see that happening, you just set your fib like this, wait for it to retest 50%. You can either limit order here or wait for a better reaction to go long, okay? But the trigger would be that 50% retest. And in best cases, you should just go with limit order setting at 50% right after 30 minutes. As you can see, the trade we took here, we we did it at the top. So if we had taken it at the 50%, that would have been a 3R. That's actually much better. Okay, so the checklist that I go through is number 1, are we in a range bound condition over the past at least 4 hours, okay? At least 4 hours are we in a range bound condition. So is price doing this? Or even if it's doing this, because it's corrected 50% of this move, right? So opposite like this. It is trending, but it's trending in a range-bound setting, in a range-bound condition. So the trade we took, it's very clear we're in a range-bound condition, right? So there, here to here, it's corrected more than 50. So it's trending towards the downside since 21 UTC last night. So any overextension, there should be a snapback. So another failed case here would be this one. So this is also another, it's actually a good opportunity to study if you get stopped out using this entry model. So this one is a very clean overextension towards the downside. And here, you would actually take the long here after 30 minutes, right? You had the new low, then you break this high. So you wait for a retest. Okay, it never came, not until here. So you would take the long right here, place your stop loss here, and target 50% of this, which is here. Okay, so that would give you 1.3R. But during these times, it does go in your favor, but you get stopped out anyways, and it continues to trend downward. This is nothing you can do you can't do anything to stop this. Okay, market conditions always change. You cannot control what the market is doing. And that is exactly the part I'm trying to figure out is, okay, we have our setup, but why did it lead to a loss? Could it be, pretty high in volume for the sell volume? Doesn't look like it, right? So what about in the footprint? What does it look like in the footprint? Is it predominantly more bearish, or is it lack of bullish delta in the footprints of these candles? So it's a lot to go through, but once we get there, we'll do a new video about it. Okay, so going back to the checklist, all right, are you in a range-bound condition, right? This is not a range-bound condition because this didn't correct 50%. It's just going. Okay, so if Asia and London is trending, it's a no trade day. And checklist number 2, yeah, the one I explained, look for 20 minutes of overextension. 20 minutes overextension before the halfway point, which is 30 minutes. Okay, then entry after 30 minutes. So halfway into the hour, you take your entry, but only if you see these entry models, which is basically a shift in market structure. Okay, that for the long, or this for the short. Okay, and this can be expressed in the candle sequence, where you create a new low, then the next following candle breaks its candle high. So for this, it's this. Okay, so perhaps I'll do another video to go more in depth about this. If this video gets 30 likes, I'll go more in depth about this. Okay, all right, boys, I hope this video has helped you. Smash up the like button, subscribe to the channel, and we'll keep more coverage on this. My name is Ron, shining out.